Hi, welcome to this video today, which is on the subject of Forex trading profits. Now, in terms of if you want to win at Forex trading longer term, you must run your big profitable trades and not be tempted to bank them early. You need to cover your inevitable losers. Now, there's a lot of talk that cutting losses is the hard part of Forex trading. I personally find that easier than running profits, and a lot of traders find running profits hard. You need the discipline to do it, and the reasons why most traders can't do it basically come from our innate psychology, the way we're genetically programmed, and that will also spill over into strategy and mistakes. Now, I want to go through both areas and then how to overcome the problem. Now, what I want to start off with is a short video clip where people are going to be asked a question and they're all going to give the wrong answer. Most people give the wrong answer to this question. This reveals why holding profits is very hard for us as humans. Right, let's take a look at the video clip, then we'll be back to discuss in more detail.
We asked shoppers in a Chicago mall if they would prefer $100 in a year's time or $102 in a year and a day.
I'll take the $102 in a year and 1 day.
$102.
Year plus a day.
And then I can wait that extra day for the $102.
Yeah, for extra $2.
Yeah,
it really won't make me a difference.
I would do the 102 a year and a day from today.
They all made the rational decision.
What's 1 day after a whole year of waiting?
And chose the larger amount. Then they were asked if they would prefer $100 today or $102 tomorrow. The larger amount is still the rational choice. So what did they say?
Oh, I'll take the $100 right now.
I would take $100 today.
I would prefer the $100 today.
Today.
I'm taking $100 today.
The desire for a quick reward
$100 today.
trumps their rational self-interest.
There's something called present bias, that if we have the option of something right now, it's very tempting to go for it.
Welcome back after that short video clip there. And the second question, they all give an illogical answer. Most people will give that answer if presented with the question. In terms of present bias or recency bias, it's very prevalent when we're dealing with money. Okay. Now, in terms of not being able to hold profits, so you've got to overcome present bias. I'm just going to go through how you do that, and also basically how to overcome other biases that come into play, which will tempt you to snatch your profits. I also want to go through strategy mistakes. Okay, a lot of traders could hold profits, but they just implement their strategy in the wrong way. Okay, right, I've written up these points on a storyboard. Just want to go through them. I want to go through some real examples in the market. Right, let's take the points and discuss them in more detail. All right, I've just written up some points in relation to dealing with profits, and then we'll look at some examples in the market. Now, in terms of point number one, present recency bias focuses us on the short-term information the brain receives over the longer term, and the reason why is obvious. It's genetic, it's to do with survival of the species, but of course it comes into play when we're trading and dealing with money, as we saw in that video clip. Okay, so we've got to overcome it. Now, in terms of point number two, it's to do with losing against profits. Okay, it's a fact, we hate losing twice as much as winning. Okay, Daniel Kahneman's research, his excellent book Thinking Fast, Thinking Slow, is really insightful. You should go and read that book. He's a Nobel Prize winner in terms of psychology. We do hate losing, and this comes into play when we first get a profit in the market. Okay, so let's say you do a trade, it moves a little bit into profit, and then it stalls. Okay, or maybe it comes back a little bit. Okay, traders fear that profit turning into a loss, even though it might not be that big. A stall or a slight retracement, they think, well, I may as well snatch it. Okay, or what they'll do is they'll bring their stop up to break even. A lot of traders want to do this. As soon as they're in a trade, they want to get that stop to break even to prevent a loss. Okay, it's dumb because you probably move your stop into the noise, get taken out, and then basically the trade goes back the way that you thought. Okay, if you're not confident in the trade, you're better off to come out at market rather than moving the stop to break even. It makes no sense whatsoever, but it just shows how much people want to avoid taking a loss. Okay, let's say the profit gets a little bit bigger, it gets to be a bit of a meaningful profit, trend starts to develop, the volatility will very often increase and you're bound to get retracements. You have got to work out what is a natural retracement against what is a trend change. Okay, and you tend to find when you get kind of a meaningful profit, traders will move their stop up to a level which is obvious as the first level of support and resistance. If you do that, you're going to get taken out the market. Okay, so you've got to deal with those retracements. We'll look at that a little bit more when we do the real time examples. Now, in terms of trading open profits with discipline, do not watch price action. Do not sit in front of a screen. Do not be checking it on your smartphone all the time. You'll get dragged in to the short-term price movements. Your emotions will get involved. You'll see what is just not really important price action as meaningful. You may want to just suddenly come out of trade or enter an extra trade. You're acting on impulse. That's what watching price action does, and that's why people sit around at screens all the time, never make money, and it's extremely stressful as well. You should only watch price action a few times a day. We do it twice, sometimes 3 times if there's a big news event on, but we don't constantly look at a smartphone or sit in front of the screen. Okay, you stop losses in, you think you know where the price is going to go. If you're wrong, you knew what your loss was anyway, you're out the market. Okay, you can review the trade just a couple of times a day. That is enough. You should always do pending orders, never market orders, in my view. And I think one of the reasons that traders are always watching price, or a lot of traders, is size worry. They trade size that is way too big. They can't really take the loss if it comes. They're always looking what price is doing. You've got to trade with a loss that you're happy with, and size should not be too big to cause danger to your account. Done plenty of videos on money management, which you can go and look up on what is a good size to trade, which is not going to ruin your account. Okay, it will give you decent profits against the loss that you take. So look at the money management videos in relation to that. All traders need to learn the 90-10 distribution of profit and loss. Hardly any traders know what it is. It's been statistically proven across many different areas of investment, from Forex to commodities. If you trade long enough, over a year, you'll tend to find that 90% of your profits are going to come from just 10% of your trades. The others are going to just be minor profits or losses. And that shows you how important it is to run the big 10%. Okay, a lot of people think, oh, I can make regular profits every week or every month. No, you can't. You can have your profits concentrated in just a small number of trades, statistically proven. We've done a full video on this, which you can look up in our playlist. Now, in terms of if you're trading, you don't have the confidence to hold a big trend. Okay, and when I say confidence, you need to have, in your kind of strategy, a way of measuring a big trend. Okay, now a lot of traders will look at chart patterns and technicals, okay, and just try and trade those, and you're never going to hold a big trend. Okay, why? Because you don't know what's behind the move. The chart patterns and the technicals are a reflection of the sentiment, big fundamentals behind the chart. You've got to know where the big money is sitting, and you've got to know if markets are at bullish or bearish extremes. It's not that difficult to do. We've done plenty of videos on this. But yeah, price action traders, if you don't know in your mind why a trend might keep going to the upside or downside, how can you hold it? You just haven't got the confidence, okay? So you need to do simple sentiment analysis. I think, said it in the intro, losses, I find them easy to take. They're kind of finite, aren't they? You put in the stop, you're happy with the loss if it gets hit, that's it, okay? You know the risk and the level you're going to come out at. But what about running profits? You may have a target or whatever, but you have to decide when to actually call it a day in the trade, okay? And I think in terms of a good lesson comes from Leo Freeman Storr, who is a hedge fund manager, in his excellent book, The Art of Execution. If you've got a really big profit, bank partial, okay? Just in case the next retracement coming is a big one or it is a trend change. So when you've got enough, take, from our perspective, we'll take half at a certain level, okay? Which I'll go through when we look at some real-time examples, which we are going to do now. But in terms of these points, keep them in mind, and if you do, learn them, then you will be able to hold profits with confidence. So I'm just going to go through how we do it with a few examples. So let's go and take USD. I just want to go through briefly on this chart, another, just how you hold profits, partial banks, and stop loss placement. Now you do have a big rally up here, and I was extremely bearish when we went above 121, where my cursor is, and I sold that red. But we go up. Now speculators heavily long of the euro. We've got a bullish extreme, but we still push on, get above the 122 level, get stopped out. I think it was 140 pip loss. Okay, but then we'll try it again. So this candle here, the red one I'm highlighting, becomes a very aggressive entry. Get in. We then can't get higher, work our way lower, retracement, roll over, then the big red. That's the big just getting hit, or big speculative stop hit. So we think that will run on. Goes down to 119. Now at this level here, take 50%. Why? 300 plus pips. Even if you think it's running on, that is a very good profit. You can tuck that in the bank. That makes the other 50% easier to hold. And you can also look to put the 50% you banked back in, maybe at a better price. So we run on. Then we have a retracement. I did want to put the profit back in, but it didn't go high enough for me. This comes down again. But I'm still in. I want to get the 50% back in. It'll probably be into this zone here, okay? Now, 119 is an obvious level, okay, for Euro bears to put their stops behind. And there'll be a lot that put it just on the level or behind the level. You've always got the risk institutions will take those stops, and then prices roll over. So we'll have to see how we get the other 50% back in. But never have your stop down here. You will always go behind second level resistance, which is here, and back from it. So 119.80. Okay, so giving it plenty of room. That's what you have to do if you're following big trends. Okay, at the minute, this one's really good. We think we're going to get more out of it. We'll see if we do. 116 then 114. You lose 150 pips, and let's say you're only winning 50% of your trades, which is what we do over time. You really want, 300 or more pips, don't you? So have to run your big profitable trades, hoping this one will carry on to the downside. Okay, now in terms of, look at one more pair, it's been a favorite of ours recently. Go down to it. It's USD CAD. This one we actually got our 50% bank right. In terms of, come up here, we go long at 121.30. We accelerate to the upside, and we almost get to 125. This is on a Friday, actually. So I thought it's worth taking 50% the profit in. You got well over 300 pips. Leave the other 50% run. It comes down, takes us out below the 124 level. Okay. Base, and now we've come back in long. Okay. Sometimes you will get stopped out of a trade. and you're still really, really bullish, which we are. Yeah, we're at 123.30 back in, come down a bit on Friday. We're looking for 126, then 128. But if you look at the stop, our risk against our reward is pretty good, isn't it? So there's a couple of examples. Also on this one, you can see what I've done. I've got the first level of support here. The stop must be back behind this level here. Well, not must. That would be our view. You always want to be wary of those tricky institutions who'll grab some stops, okay? In terms of this one, yeah, we know the sentiment behind the charts. We may not have judged it correctly, which is true of any trade. But yeah, if you learn to judge sentiment, gives you an edge because you can set targets and have confidence to hold the trade. So hopefully tips in this video were useful. Thank you very much for watching it. Take care and have a good day.